The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look at the DAX. As you can see, it's been under a great deal of pressure, and it hasn't really abated very much. If we take a look at the FTSE, which is the next one we usually look at, you'll see that we're seeing the same thing. The rally that we had was rather minor. Whether it's going to continue this way or not, I don't know. But we have some of the most bearish patterns that we've seen in a long time in the stock market indices. I'll go over them in just a minute, but I wanted to remind you folks that today's guest will be Dennis Gartman of the Gartman Letter. And then tomorrow we will have Stan Harley of the Harley Stock Market Cycles on. So it should be an interesting 2 days. Let's take a look what's really happened here with these stock indices, folks, because we've had something really important happen. I'll give you an indication of that right now as we look at the Dow Jones E-mini. The Dow Jones E-mini, as you can see, we went down and we made a double bottom, and then we had this huge rally of 500 points in the Dow, and we went exactly to the 78% retracement of the previous day's high, and it was a 1.618 expansion of the Tuesday high. So that's a very, very bearish pattern. You can see what happened, and now we are trading below 24,000. That's because that ABC structure has been broken, and that means it's going to go a great deal lower. If we look at this on the eyes of the E-mini S&P, you're going to see pretty much the same thing. You see the big rally that we had from 2,700. We got up to 2747. That completed the ABCD pattern. That was a 50% retracement of the high that we made back on June 21st, and it was also a 38% retracement of the high that we made, back in January. Now, if we look at this a little bit closer, you'll notice that we've broken down below that key level of 2,700. Folks, that is equivalent to what we did in the NASDAQ when we broke 7140 earlier in the week, and the NASDAQ is now trading below 7,000. So this is telling us that the prices are really headed lower. Now, we might get a rally today for sure, but the key point here is that when you see these ABCD patterns over a day or two period, and then they give it all back really quickly, that's a very bearish market environment. There's no other way to look at it. There's just it's actually quite scary if you want to think about it, but long term it probably doesn't mean very much, but we'll look at it. Now, if we take a look at the NASDAQ, it was even more bearish, because if you look at the NASDAQ, what really happened was we went up to a 382 retracement. Again, we completed the ABCD pattern, and now, as you can see, we're trading down below the 7,000 level. And this ABCD structure is going to, if it is correct, in other words, your high around 73.50, which was the contract high, and then you came down to your B point, which was 7,000, and then up to 71.40. You're looking at another 400 points down. You're looking at 6,500 in the NASDAQ on this, and that there's not really a whole lot that you can see other than that pattern. I mean, there's just it's just a very, very bearish pattern, the way it looks. So let's pay attention to that. One of the markets that was really tipping its hand, that it was quite bearish, was this. This was as of Monday. This is where we were with the banking index. You can see that the banking index had these lower tops. We completed a perfect Gartley pattern at the 111.75 level, and I'll try to post the newest of the banking index charts, because I updated it this morning early because I wanted to show you the fact that it has had a pretty significant move to the downside, and I believe I have it here somewhere. This might be it, and there it is. Hold on. you'll see that we're ready to take out, and we'll do that this morning most probably, is we're getting ready to take out the lows from March. Folks, if we do that, all you have to do is to measure. You see the perfect ABCD on the upside where we stopped at 111.75. And if you just take the ABCD structure, that means that the A point is, the 116, and then down to 102, that's 14 points. And then we went up to 111, and you subtract 14 points from 111. You're looking at a price of 93, right around 93.90 on this banking index. This is going to drop, looks like it's going to drop 10% very, very quickly. Now, I don't know if that's a forecast or not, but the pattern is certainly suggesting that. Now, maybe this morning there'll be some cooler heads prevail, and maybe it won't break those lows, but right now it's looking very, very ominous as far as a possibility of rallying from here, because the patterns are really heading lower. And we'll see if these continue like that, but this is what we're watching. Now, there's another one that's interesting this morning, and that, of course, is the euro. I wanted to bring this up because we talked about it yesterday. When we hit the perfect 61% retracement on Monday, you'll notice that was right at that 117.10 level. Then we went down to the 78% level at around 116.30, and then rallied about 40 pips, and then we just started breaking down. And I've marked the 61 and 78% levels to show you that there was, that just doesn't stop very long. I mean, it just keeps dropping and dropping. So once we go below the levels that we're looking at, what we should look for is a rally should end around the 116. And the reason why we say that is it's a 382 retracement of the full move down from the 26. And that's exactly where we stopped so far this morning at 116.01. We backed off about 20 pips from there, but not very much, but at least it hit that first number. So we'll see if that's going to be the case. Now, someone's asked a question about what is the longer term objective of the euro, and that is, if this ABCD structure from the 118 down to the 105 level is correct, you're looking at 3 points, and if you figure the high was at 117, subtract 3 from that, you're looking at somewhere between 114 and 113.50 on the euro. So that's an easy one to figure out if in fact it does get below that 115 level, and we're not very far from that level as we go through it. The main thing is that we'll be watching to see what's going on here with these things. So let's pay attention to some of these other markets that we have going on, and one of those, of course, is the gold market. And we're going to cover that. I'm going to post this chart. This is a beautiful chart from our good friend over in Calabrese, Italy, Mr. Enzo. And it's a really good cyclical description of what's been happening with the gold market. And when we get back from the break, we're going to discuss that a little bit and try to relate it to, what we're seeing in silver and platinum, to see if we can come up here with a good buy point in gold here very shortly. So we're going to pay a few bills, 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, as we look at this chart from Enzo, you'll notice that it has the cyclical components that were purported by James Hurst in The Profit Magic of Stock Transaction Timing in 1970. You'll notice those green lines are the high translation lines. It shows where the high was made. And when the high is made on the right side of the cycle, that's known as the right translation, that's bullish. And when it's done on the left side, it's bearish. And as you can see here, the one that we had here was on the left side, so that makes it bearish. The problem with this theory, and believe me, I paid the high price to figure it out, is these cycles usually only work for cycles 1, 2, and 3. They don't continue to do it. During 1972, 73, 74, they continued to do it during the time of the Russian grain robbery and all the other things, but it topped in July of actually 73, I believe, and then it changed and the market went into a bear mode. It didn't finish until October of 1974, which was the October crash at that time. The Dow had given back more than 50% of its value. But the cycle theory is very good, but what you're looking at here is a really good description of what that cycle theory was all about. Now, as we look at the gold here, I wanted to point this out because this was a real critical point this week that we were watching, and that is when the gold went down and made that 1.618 expansion down there at the 2764 level. Folks, once it went below that level, that was signaling like a giant red flag that it wanted to go lower. And we broke 1250 last night. We got down to 1249 and change. We have not had a more than a $7 rally in this in the whole month. It's been since June 15th. It's when we made that. June 14th is when we made that high up there at 1313. And since that time, all of our rallies have been virtually nothing, $7 or so. And usually the rallies are between $11 and $17. So this is still very bearish. I believe we're coming down to something that's pretty significant, but as we said many times, the gold to us looks like we're heading towards this level of right around the 61% retracement level, which will take us to around 12.12 per ounce. And when we get there, we want to be very careful because, as you know, these things can go through these numbers. So you want a confirmation of several different patterns coming together at that point. And we should be able to see that if we get to that point for sure. Now, the next one that we want to talk about here is platinum, because platinum looked like it had made a really good bottom because it rallied $28 an ounce off of the 858 level, and we went straight up to 882, almost $30 an ounce, and boom, here we are heading lower. Now, if you look at platinum closely here, we have a really nice ABCD structure coming in from the January high. You came down into April, you rallied up to a 382 retracement, spot on, and now that ABCD structure carries you down to that 1.618 expansion number, which is right about 835, and we're only $20 away from that, so that could happen anytime now. So we'll be watching those very closely because these will be really key patterns to pay attention. As Bill Meridian, who was our guest yesterday, made a really strong case for the possibility, I'll cover silver in just a minute, Danny, is a really positive case for gold to rally during the months of July, August, and September. And remember, that's a probability also. It's not a certainty. There's no question about that. Here is what we're looking at in silver. We did finally break the $16 per ounce level yesterday. This tells us that I still believe that we're heading down to $15 an ounce. If we get there, folks, that's going to be one of those widows and orphans trades, in my opinion, because you're going to have the monster ABCD pattern on the daily. But if you looked at it on the weekly chart, which I'll cover in the newsletter this week with the longer term charts, is you'll see that that's also a 78% level on the weekly. And that'll be the lowest price silver has had in the last 6 years, I believe. And it'll be very interesting to see when it gets to $15, if it does get there, if it's going to hold, and if it'll offer a really good, buying opportunity. And as I mentioned before, it's not just that level at $15. You've got to have other things there to help you substantiate that there's a good support at that spot. You'd like to see several other ratios coming in from other swings, like as 1.27 or 1.618, to tell you that's where you're supposed to be. But you have to wait. That's, being a trader is a lot like being a doctor. You have to have patience. So watch it closely, but we'll be following it here daily to see, because we're getting close now. I mean, we're really close on platinum, and we're only $35 away on gold. That's just one bad day, and it could easily get there. Then we will watch it, very, very closely. We had another question about the euro, and that is my longer-term projections on the euro, folks. I mean, we're looking at the long-term monthly charts, of course. I don't have those with me on this letter, but if we'll look at this, we'll be able to see where we are pretty good. Now, the low in silver so far has been 1594, Ruby, I believe. You should double check that, because I'm almost 100% positive that it went below $16. At least my charts are showing that, and if they're wrong, something's really wrong, because the data is just not wrong on these. Anyway, we'll double check it. If Mr. Z, if I know Mr. Z watches silver all the time, just let me know that silver did get below $16 an ounce, if you would, please, because I want to make sure that I didn't make a mistake on that, because I'm showing it, and I saw that it quickly rallied 10 cents from that level. So we'll see. But I still think we got a chance to drop some more in the silver and in the gold. And silver might be the key here, because if we don't get much lower on this, we'll be able to see. Yeah, there we go. Yeah, that's what I thought it was, Marshall. Yeah, 1594. We'll see what it is. Okay, we'll watch that very, very closely. Now, as we come into trading this morning, we're going to be sharply lower in some of these things. That doesn't mean we can't get some good rallies, but folks, we have broken some major support now in these markets. Wow, the euro dropped 50 pips. Holy cow. That's, wow, it had a high of 116 and it's dropped 50 pips. Holy Toledo, that one turned to be that turned out to be okay. Anyway, let's tomorrow is going to be an interesting day because we have Stan Harley as our guest. Plus, we've got the crop report tomorrow. That's going to be the first indication of what's going on over there. And the market is so bearish. I mean, you just can't find anybody that wants to buy the grains. And here we have November soybeans sitting right at the 61% retracement today. But with the report, you know, it's most probably going to be a surprise, the opposite of what we had happen with the tariffs. But, you know, that's just a guess. And guesses are not very good in this business. But we'll follow the report, you know, tomorrow. Well, I won't have it until after we'll cover it on Monday, of course. 877-927-6648. Stay tuned for Dennis Gartman of the Gartman Letter.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Dennis Gartman of the Gartman Letter on the line. Dennis, are you there?
I am here, Larry. Thank you.
Hey, thank you, my friend. It's been a long time since we've chatted. Anyway, since this goes all over the world, Dennis, could you tell some of the folks a little bit about your background? Because you've been around as an icon in this business for a long time. So could you just give us a quick review
Sure.
of, you know, all the stuff you've done?
Sure. I started out in the early 1970s at Cotton Incorporated as their chief economist. I then traded foreign exchange for what was then NCNB in Charlotte, North Carolina. until the middle 1970s. When moved to Chicago, had a seat on the Board of Trade, and was A.G. Becker's chief financial futures analyst for a number of years, then an independent member of the Board of Trade. Sold my seat in 1984, moved to Virginia, and began writing the Gartman letter on a daily basis since 1984. And except for one day, 1 month ago, I have never missed a day. I write every single business day of the year. I have never been able to convince the British that July 4th is a holiday, for example, so I have to write for the British clientele. One of these days they'll learn that they lost the war, but that's another story for another time. And I trade only my own money, so I write this daily newsletter. I tell everybody that my job is to be the liberal arts major of the capital markets. I know a fair amount about grain. I know a fair amount about the energy markets. I know a fair amount about Federal Reserve and monetary policy. I know a fair amount about equities. But my job is to explain to the grain trader what's happening over in the energy market and what effect it may have on him. I can't tell a grain trader more about grain than he or she should know, and if I can, he or she won't be trading grain very long. My job is to tell the energy trader what's going on over in the foreign exchange market and what effect it may have upon him or her. So my job, as I said, is to have a broad overview. I'm lucky enough to live in Southern Virginia and away from the madding crowd of New York and Chicago and London. And by that time, the news gets filtered, and what is important is what I put in my newsletter and say, here, take a look at this. I think this is important, and I think this is what it shall do to the market.
Dennis, when you do your cameo appearances on CNBC, are those right out of Virginia, or do you go into New York for that?
Well, it depends. If I'm in New York, I'll do I'll do Fox or CNBC from there. But more often than not, I'm here in Virginia, so I do it from the Christian Broadcasting Network, which has its headquarters here in Southern Virginia. Pat Robertson, as we all know, has a direct link to God, so his TV studio is really quite efficient.
Well, that's good. Boy, you've really done a lot of things. I have to comment, I look at your letter, and boy, you've really done a great job. And what you described is really true. You try to bring all areas of how the markets interact, and my gosh, with foreign currency the way that it is now, and the quantitative easing and everything, all of these things are interrelated because it's a movement of assets. And what
I found interesting is that the grain trader doesn't talk to the energy trader, and the energy trader rarely talks to the foreign exchange trader, and the foreign exchange trader rarely talks to the debt trader, and they should, but they don't.
Yeah, they all certainly are interrelated. Now, you've been very bullish crude oil for quite a while, and of course we had the big breakout to the upside this week. What's your feeling on crude here on a longer-term basis? Do you have an opinion?
Well, to me, it's getting extremely expensive, and the amount of production that can be brought on stream in the Permian and in other oil producing areas here in the United States is going to pick up, no question. But demand around the world is picking up. The number of automobiles being sold to the Chinese public is going to continue to move from the lower left to the upper right. So it's still a bull market. And one of the things I want to explain to people and to pay attention to, and not enough people pay attention, is the shifting nature of the term structure. Right now, the crude oil futures, whether it's Brent or WTI, and especially in WTI, the term structure is backwardated. That is, the front months are higher than the deferred months. And backwardated markets are markets that tell you that demand is strong, not that supply is limited, but that demand is strong. And demand is a far more important aspect of any market than is supply. The markets are backwardated, and as long as the market is backwardated, you can't be short. The only way you can approach a backwardated market is to buy weakness if you can. And as long as the backwardation continues to widen, and it has in both WTI and Brent, but especially in WTI in the past 2 weeks, as long as the market remains backwardated, you have to be a buyer.
Well, it's certainly been going up, that's for sure. Now, Dennis, we have a crop report coming out in the grains tomorrow, and I know that's been one of your specialties over the years. So we had the tariff thing come out, and it decimated the soybean and corn markets and wheat markets. Do you have an opinion? I mean, this is we're almost in historical levels here. What do you think's going on?
If it weren't for the fact that the United States, that the Trump administration is making a terrible, terrible decision as far as trade tariffs and trade protection is concerned, the grain markets would probably be reasonably strong. You lost me for a second, but they're back. The grain markets would probably be reasonably strong. But the president has put, for lack of a better term, here's a very sophisticated economic term, has put the kibosh on the grain markets, and they're going to continue to be on the defensive. The problem also that we have is that it really has been a truly great growing season in the first 2 months of the year. The crops are well ahead. I mean, you've got good to excellent ratings from the USDA on the weekly reports, up in the high 70s, well above 5-year averages, well above last year. The wheat crop is being harvested at almost a record pace of quickness. You've had good rains, not excessive rains, nor have you seen a lesser amount of rains, and you've had relatively moderate temperatures. Now, the bulls are hoping that this ridge of that usually happens in July may happen again and put some a weather bid into the market. But if the only thing that you have going for you right now is a weather bid, and betting with weather is a very, very tenuous way to trade the commodity markets. So I'm always worried about the June USDA planning intentions report, and tomorrow we get the stocks and all positions report. And historically, this has always been a surprising report. I'm not even willing to put out estimations on the numbers. I'll wait for the numbers to come out. And I don't have any position on in the grains right now ahead of that report. I learned long ago, don't have a position going into the June stocks and positions and June planning intentions. Wait for the report to come out, take the numbers, and ascertain where you think the market's going to go after that. But I think the president has done damage to American farmers by putting on the table the talk of trade protection and tariffs, and I think that's a very ill-advised decision on the administration's part.
Well, the market has certainly told you the answer to that question, and that is yes. That has been a big problem. Now, I'd like to go over one market here that we do quite a bit here at TFNN, and that's the gold and silver markets. What's your feeling here in the precious metals, Dennis?
If you own gold in dollar terms, you've got a problem, because you've got a gold is always an inflationary circumstance, and inflation is always a monetary circumstance. What is the, let me rephrase that. Which monetary authority is curtailing the supply of reserves, and which monetary authorities are expanding the supply of reserves? We in the United States, our Fed, has already begun the process of unwinding quantitative easing. We are in the process now of quantitative tightening, and I say that looking at if I can only look at one economic or one monetary aggregate, I'd look at the adjusted monetary base released every week by the Federal Reserve Bank of St. Louis. And the adjusted base having gotten, I think, to $4.1 trillion in the middle of 2016 has fallen to $3.6 trillion. Now, $3.6 trillion is still hugely above where it was in 2007.
Hey, Dennis, we have to pay a few bills here with the commercial. Could you stay with us for a few more minutes, and we'll do another little segment here of about 5 minutes?
If that would work for you, it will work for me.
Hey, thank you very much, Dennis. We'll be right back with Dennis Gartman of the Gartman Letter.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're talking with Dennis Gartman of the Gartman Letter, and we're talking about the gold and the silver. And so you don't think there's much hope for the gold here for a $50 or $100 rally?
Well, there's always a hope for a rally, but gold has responded in dollar terms very, very poorly. And every level of support that the bulls want to hold will prove effective, has proven ineffective. Hope always is an ephemeral point of view to have in any commodity market, anywhere. It's just very difficult to be bullish of gold. We are allowing the monetary base here in the United States to decline, which is what we should be doing. On the other hand, the monetary authorities in Japan and Europe are continuing to expand, and they're continuing their experiment with quantitative easing. So if you're going to own gold, I tell you to own it in terms of euros, own it in terms of yen, but owning gold in terms of dollars has, for the past year and a half, been a very, very suspect and very trying experience, to say the very least.
Wow. That's really a good point to bring to our listeners, that's for sure. Could we talk just a little bit about what your feeling is on the stock indices here going into the future for maybe the summer months?
Sadly, I think we've entered a bear market. You only know you've entered a bear market when, with the benefit of retrospect. And if you miss the top of the bull market or the bear market by 6 months, you're still going to be relatively early. I keep a very simple average of 10 of the largest stock markets in the world, and it topped out on January 29th. The U.S. stock market, as whether you look at the Dow or whether you look at the S&P or whether you look at the Russell, the Dow topped out in late January of this past year. The German stock market topped out in February of this past year. The British stock market topped out in January of this year. I think you've entered a bear market around the world, and I think you have to be very careful. I think this could last for a year or two, as bear markets usually do, and I think we've only begun to get started. So, again, as I started the conversation early on, I trade only for my own account. I trade my retirement account, which has my own several millions of dollars in it, so I take it's important to me. And right now I'm a little bit net short. I'm not hugely net short, but I am net short, and I'll probably continue to be that way. It's interesting to me, most of the broad indices have bounced this morning as we're talking, have bounced off their low made earlier this week, but if those lows are taken out, I'm going to add to my short positions.
Well, it's certainly they're heading down. It looks like it's got a long way to go if it breaks some of these numbers that you just talked about. Yeah. Dennis, how would the folks reach you if they wanted to get a sample of your newsletter?
Well, first of all, I'll tell you that it's not inexpensive. It's several $100s per month. It's there every morning at I get up at 1 o'clock in the morning and produce it and have it out to everybody by 5:15 Eastern time. But if they want to take a look at it for a couple weeks, just send a note to Chip, C-H-I-P, Chip at thegartmanletter.com. It's all one word, TheGartmanletter.com. Send it to Chip at the Gartman Letter, or Liz, L-I-Z, Liz at thegartmanletter.com, and we'll be happy to put you on for a couple weeks, let you take a look at it. It comes out every morning, and as I said, I've only missed one day since 1984. And I hope that I don't miss another one anytime soon.
Well, I know it's one of the more popular letters on the street, and you have a really great reputation that you've lived up to through all these years. And I want to thank you for being on as a guest, and hopefully maybe in a month or so we'll have you on again if you don't mind.
Oh, Larry, it'll be my honor, and I've enjoyed it and look forward to doing it again in the future.
Okay, thank you very much, Dennis. That's Dennis Gartman of the Gartman Letter. You bet. Have a great day, my friend. Okay, folks, let's go into the last section here. We've got the market. We've rallied about 50 handles, a little more than that in the, about 60 handles in the NASDAQ. And we rallied about 120 points in the Dow Jones. And, of course, we're giving it back really quickly, which is characteristics of a bear market. Now, as Dennis mentioned to us about this report that's coming up, stocks in all positions that will be coming out tomorrow. In the grain markets, the soybeans are now breaking down below their 61% retracement level. They're only about a nickel away from the 78% retracement. And that's $2 a bushel under where we were on on May 27th, when we were having those really hot days during the Indianapolis 500 race. And you can see how when weather changes, these markets move, rather dramatically the other way. So we'll be watching this, but I think with the full moon not causing any activity at all in either gold or the wheat, corn, or soybean markets this time, there is something else out there that is pulling this market down. So we'll just have to wait and see what the bottom looks like, and it'll give us a good what we think is a low risk buying opportunity, but not during this report. The report is what we want to be looking at as far as let it get it out of the way, and then we'll watch for a small Gartley pattern to form, or maybe a 3-drive pattern to form, that we can quantify a good place to enter if we find one. And maybe they go down forever. I don't think that's going to be the case, but we want to watch it for sure. Look how the market has given up. We have given up just since we've been talking. The Dow Jones has given up 100 points. The NASDAQ has dropped 35 points. I mean, it's not taking any prisoners, folks. This is not a good sign for bullishness. It really isn't. You see those short covering rallies, and that's usually what they are. And then we'll see from that level, where we go from these levels. But remember, these markets are very jumpy, because the slightest indication that something might have changed, you see the market could move 1%, 2%, 3% immediately. And you've got to be extremely careful, and that's why you want to be able to use your stop protection program that you should have in place. And if you don't, then you're basically telling the market you're not afraid of it, and you don't, you know what it's doing, and the market doesn't. That's always that's a bad place to go. So we'll see. Anyway, we'll keep an eye on it. But remember that we've broken below that 2,700 level. In the S&P, from a technical basis, that tells us that we do want to go lower. Remember, the long-term price objective that we have on these on the E-mini S&P is at 2,400, and I believe the price on the Dow Jones Industrial Average is right at on the long-term chart, which I will update this weekend in the 24/7 newsletter. We'll do the longer-term charts to see what these patterns will be. Remember, this is the first really bear market that we've had in a long time. I mean, several years. I mean, we had a small bear market. I mean, really small, when we were having the election. Back on November the 8th, the market had backed off 38% from a previous high. But then, it went parabolic, and so we're correcting some of that. And I don't think we're going to take out those lows of November of 2016, but we should have a nice ABCD correction down here in the Dow at around 22,000. So that's 2,000 points from where we are right now. But that's a longer term objective, and whether that's going to be the case or not, we'll have to wait and see if that's going to continue doing that. The gold, platinum, and silver, I have to agree with Dennis. They still look lower to me. They don't seem to have any indication of wanting to bottom. And again, the full moon didn't do anything to any of these markets this week other than accelerate them to the downside, and that's really not a trend change at all. So that's the main thing. Now, Rich Anderson was kind enough to send me a little review of the crop that we've had for these reports for tomorrow, and I'll bring that up and then we'll discuss it towards the end of the show. So 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted a chart that was sent to us by Rich Anderson. It basically shows the last 5 years. Going into this report, you can see that about 3 out of 5 times the market was bearish. This basically means that you don't have an edge, so it's better to wait till this report is out of the way and then find a pattern. So this is an important report tomorrow, so we don't want to mess with it. So let's just wait and see what happens. Now, I don't know if well, I'm sure you folks realize it, but we've had 100 and some point swing here in the NASDAQ in the last hour or so. Last 2 hours, we've gone from 70.28 down to 69.58, back to 70.20, back to 69.72, and now we're back to 70.10. That's over 100 points, folks. That means that there's a lot of rocking and rolling going on in that NASDAQ, and with the market coming back this strong, that could be positive. We might get a substantial rally off here, but I don't think it'll last very long, but we'll have to wait and see if that is going to be the case. We'll watch it very, very closely, of course. Tomorrow, our guest will be one of our good friends, Stan Harley of the Harley Stock Market Letter, who's been very bearish in the stock market, looking for a low coming in around July the 9th, I recall. And we'll see how that analysis is going to look. And he'll give us some other information of some of the things that he's looking at for sure, because he's done a great job as far as telling us, where we are with some of those things. So we'll see what's moving on with these things that we're watching. Hopefully that'll be helpful to all of us. So I want to thank all of you for being with us today and always supporting TFNN, folks. They do a great job. So the support you give us here, allows us to do shows and bring on webinars and stuff like that. And not only that, but the Tiger Den. God, you got some great people in there that really know trading and post some fabulous charts and trade recommendations. So pay attention to that if you have an interest, because it's a great place to get good information. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!